Good afternoon and welcome to the NORTHCODERS Group PLC interim results investor presentation. Throughout this recorded meeting, investors are in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just type in your question and press send. The company may not be in a position to answer every question received during the meeting itself, however, can review all questions submitted there and publish responses where appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Chris Hill, CEO. Good afternoon, sir.
Hi, thank you very much. Good afternoon. So we've had a great start to the year with our H1 results, so thank you for joining us and we're looking forward to going through them with you. My name's Chris, I'm the founder of NORTHCODERS and the CEO.
Hi everyone, my name's Charlotte Pryor, CFO. Just to go over some financial highlights from today, we're really pleased to put out our half-year results that are around half of the market expectation for the year. Revenue grew 26% to 4.4 million in the period, and this was slightly ahead of management expectations. As a growth company, we are usually second half weighted, so really happy to get to that halfway stage on that market expectation. We're pleased to report that gross margin increased to 67% from 62% last year. The year 2023 also ended on around 62-63%, so we've really driven those efficiencies within that teaching model. So that's down to the Encore platform that we have invested into over the last couple of years. We've had a tenfold increase in underlying adjusted EBITDA. This year, EBITDA is adjusted just for share-based payments, and that's gone from 40,000 to just over 400,000 in the period. That is down to investments made in the efficiencies, the investments that were made last year that are now coming through this year. We have returned to profitability bottom line with an EPS of going up to 2.58. We've got a strong balance sheet with a cash balance of 1.3 million. This is a really comfortable position for us to be in, and the cash generation, the underlying cash generation, enables us to continue to invest in platforms that will drive efficiencies going forwards. Some operational highlights. We are pleased that the demand for our training boot camps has not decreased. We are now looking at registrations rather than applications. Registrations really tell us the people that are interested in the course after they've sampled some of our material, and we believe it's a much more accurate metric to follow. So that has increased to 4,700 in the period and then has continued to grow with over 3,000 in Q3, which is obviously not actually finished yet. We had the £10 million Department for Education funding in January this year, which will continue to June 2025. That was an 18-month contract. We're working through that really well and producing really good outcomes and really good KPIs on that contract. The geographic expansion has continued. We now have over 62% of our learners based outside of Manchester and Leeds. Manchester and Leeds is where we predominantly was. That's happened really organically, and we have 34% of our students based in London. We don't have physical space in London. That is down to marketing efforts alone, and so that is a really good area for us to grow into, for us to put a bit of investment and to really explore the London market. Corporate Solutions Division has rebranded as Counter in May this year. We've appointed Tom Walton as a strategic advisor, and Chris will go on to talk more about Counter later on in the presentation. In Manchester, we have downsized our office. We will be moving into a smaller office at the beginning of next year. That is because we took 10,000 square foot just before COVID, and we don't need all that space because of the new teaching model. So we're pleased to be able to come out and downsize that office at the end of this year. That'll give us a good cost saving with rent and with a rent-free period as well. And we have released 2 new courses in the period, so Java and C#. Java, we are moving on to our second cohort, and the C# cohort is due to start in November. These are both iterations of software development, but more specialised to enable people to go into more different jobs.
Thanks, Charlotte. A significant effort that we've made this year is to really simplify the business model. I feel like last year we had many different products and services, especially in the corporate side of the company. And what we wanted to do was really bring that back to just things that we excel at and concentrate more on those, and not have too much different messaging, and really understand how to better drive growth from a simple base. So large changes that we made is Tech Returns has now been dissolved into the 2 divisions of NORTHCODERS. Last year we operated 3 divisions: Training Bootcamps, Corporate Solutions and Tech Returners. We've now extracted out the elements of Tech Returners which are courseware and put them into the Training Bootcamps, and the Corporate Solutions recruitment of experienced engineers has fallen into Counter, which I'll talk more about in a few moments. So just to run through really quickly on the business model, we're super proud to have a training model that feeds into our corporate business. We, as Charles said, have introduced 2 new elements of software development this year to our courses, which are Java and C#. Now, these are more enterprise level programming languages and frameworks that are used by, for example, bigger banks as opposed to smaller startups. And it's quite new in the industry because we do have competition from other coding bootcamps that are almost running mostly JavaScript, web-based training programs, and to go into these areas gives us an expansion into markets, especially for Counter on the corporate side, which we didn't really have before. In terms of graduates finishing our courses, we then have different options for those individuals. They go and get a role in the industry, or if they join Counter, they will become a consultant for our business, and that's a bit of a disruption model to the higher trained employee sector. Again, back to simplicity, the core drivers of the business genuinely are the fact that we have an excellent reputation and fantastic training services. We attract so many people that want to do our courses, and we select the best people for that. And we genuinely believe that our training bootcamps power our corporate market, and the B2B market is a vast opportunity for this business. But of course, over the years, the growth of the training bootcamps alone, as well as the efficiencies that we brought into by really innovating on that teaching model, are growing more profitability in those areas. So in terms of our vision, we genuinely believe we are the world's leading training bootcamp, again, with the innovation and doing things that not all of our competitors do, such as enterprise level training courses. And we think we can go on from here to grow that to being a real technology skills accelerator for businesses, certainly within the UK, and in the much more distant future. There's no reason why, as other companies have done, that can't go global.
Some USPs around our training bootcamps. So we have always concentrated on quality above quantity. We have an exceptional reputation in the industry where people will hire our graduates, and that is because the quality of our education is the best around. We believe that we are a market leader, and our starting salaries for students leaving the course are circa £30,000. We have flexible learning options, so we have a full-time course and a part-time course available now for students that can quit their jobs. They can kind of put their the job life on hold for 13 weeks, and therefore we've opened up a part-time version of the course. All of our tutors are experts in the field. They're all software developers or data engineers, and we ensure that they really keep up with the bleeding edge of what technology is being used in industry and to bring that back into the curriculum. We have over 8 years of community now. We've trained over 3,000 students, and we are seeing the benefits of those students now moving into CTO roles or management roles and coming back and hiring NORTHCODERS. We have job and placement support. We don't just teach tech, we teach the career side of things. We teach people how to get through a tech interview and how to land that first role in industry. And we have a lot of companies that we are partnered with that will take graduates from us and 89% of our grads are going into jobs that they want to go into after the course.
So a significant milestone this year has been the rebrand of our corporate solutions division, which was previously under NORTHCODERS, to Counter. So Counter is a consultancy, and the reason why we are a Counter consultancy is because we do things differently, and we're really innovating on the hire, train, deploy market by bringing a fresh perspective to the ways that companies can engage with the different teams by giving a technological lead and actually hand-picking individuals for projects, as opposed to having a big bloated bench of people that we are deploying out into contracts. And we genuinely believe that, you know, people may be deployed into war zones, but not so much into jobs and careers that they love, and that's the reason why we believe that we're a great challenge around to that market. We've got a highly experienced team. Amal, who's been with the company since the very early days, is head of our partnerships, and we are growing this brand initially with a very small footprint of Manchester only, where Amal is very well connected and also engages with other businesses to really push forward the brand. Tom Walton was the founder of a company called Infinity Works. I actually worked with Tom years ago at Sky, and he's always been a keen follower and also an investor in NORTHCODERS, and Infinity Works went on to see exponential growth, and they sold to Accenture, and he's now going to really help us with the strategy and with almost keeping us grounded on focusing on the quality and the excellence before we really go for the kind of huge growth that we believe that Counter can achieve. And also James, tech returners coming into Counter. James is a previous CTO and a technical expert who looks after our tech leads and the kind of wraparound support that we offer to our Counter consultants to make sure that both our clients and the individuals that go into these programs are going to get the best outcome possible. So what does we do at Counter? So we cherry pick Counter consultants to come into your business. That's not only about their technical skills, it might be about their career changes and returners, have previous experience in other areas. So if you're in financial services, if you've got experience in that sector, that could be incredibly beneficial to your future employer, whilst your role might be completely different. We don't have a utilisation rate issue because we have 100% of our Counter consultants are employed just for that project only. We can also source different expertise and specialisms through tech returners, which might help to support those projects, and genuinely with people with more experience leads to a higher revenue model for that. And the greatest sell point with Counter for a client who's working with us is that not only the new to technology people, like in many higher trained deploy businesses, but the returns as well, our previous experience at the end of the program, free to be employed by our clients. So we go across a fair few areas within Counter, again spreading out the expertise from the training boot camps and from the returner programs. We do software engineering, data engineering, cloud and mobile, and we're also now into areas like artificial intelligence. We've just made our first hire recently with someone from AWS who's heavily experienced in building up those large language models that we've all heard a lot about over the past sort of 12 to 18 months. And yeah, we also can look at areas such as like low-code development. For example, Salesforce would be one of those things if for those who are not familiar with the term. So what's our USPs? You know, we are the first people to meet a NORTHCODER or a tech returner, so we can naturally engage early and cherry pick the very best people for that business. And we're also a onshore model, which is the same price as a nearshore model. So as things like tax credits get more and more strict, organisations are incentivised to bring the kind of engineering and the technical teams back to being UK based. And the fact that we can do that on the same price model as the nearshore models, that's a great thing for Counter. Cool. In terms of competition, so we, you know, training boot camps, coding boot camps is much larger sector now than it was when we first started. We've had many a spin up and a new other businesses such as recruitment firms going into the area. But we genuinely innovate and we genuinely excellence first in terms of both the people that we recruit for our courses. So we're always first choice. We have amazing feedback on what we do. As well, going into areas such as we mentioned earlier, like the more enterprise level engineering is what we focus on from a training bootcamp point of view. And yeah, of course, within corporate solutions, this is a vast market. You know, the smallest slice you could possibly imagine of that market for NORTHCODERS to go into would give us exponential growth, as we've seen from other organisations who have succeeded in that field. And there's a few there listed who, some of them are our competitors, but we also have a consultancy to consultancy model within Counter that means that we can work with businesses to provide like sort of boardroom expertise, but where we are more of the team on the ground actually does the work, and that's beneficial to businesses to build out that long-term talent pool.
We've just pulled out a few statistics that we will cover before we go on to the financials. We are seeing an uptake in the labour market. We did see a downturn last year in the companies hiring tech graduates, but that has increased this year. The demand for software engineers isn't going anywhere. That continues. These jobs continue to be a big demand in the jobs market, and we just wanted to pull out a statement from Keir Starmer to kind of look at the way that Labour are looking at skills and the need for skills within the UK, especially tech skills. They have spoke about localising skills funding, and they've also spoke about further utilising the apprenticeship levy as well for things like boot camps. And so we'll see what happens in that area over the coming weeks and months, but we are in a good position to pick up any funding that there is for this type of training. Looking at the finances, I just wanted to put some graphs on here to show the revenue growth over the last few years. The 24 and 25 are based on the broker forecasts, but as you can see, we're not trying to change the world in 2024 or 2025, and we are halfway towards that management expectation at the half year. EBITDA-wise, we did have a rough year last year. We did lose money at EBITDA level, and we've kind of spoke about the investments that we made at a year where revenue didn't grow as much as we hoped or forecasted. We've completely turned that around this year, and we're very, very comfortable with the market expectation of just under £1 million for EBITDA in 2024, and then the 1.2 million for 2025 falls through really comfortably as well. So for the first 6 months, we have a revenue increase to just over 4.3 million, gross profit margin to 2.9 at 67%, adjusted EBITDA of just under 450,000, which is a margin of 10%, and an operating profit of 154,000. We do expect that the operating profit levels will be second half weighted. We are comfortable with the expectation in the market on that figure, but there is more profit to come through in the second half of the year because we've made investments in the first half which won't carry through. On the statement of cash flows, next slide please, we have positive cash inflows from operating activities. We have a slight increase in trade and other receivables. That's the timing thing on the DFE money coming in. We obviously teaching bigger cohorts as the years go on, and therefore that's caused a slight increase there. And then a slight increase on trade and other payables as well. A very, very small increase, mostly just timings. We have had no new issue of shares in the period and no new bank loans and borrowings. We repay bank loans at around 22,000 capital per month, and we obviously repay our lease obligations as well. As I said, for next year we do have a rent-free period on the leases, so we will generate cash in that area compared to this year. We have obviously interest on the bank loans, but most of that is offset with the savings account that we put the cash balance into. And the cash balance at the end of the period ended on 1.3 million. Balance sheet wise, we have non-current assets of 3.6 million. This is 1.6 million worth of intangible assets. So when we develop the platforms such as Encore, JS Basics, so Encore is our learning platform, JS Basics is the platform that we use when people apply to the course. So they will study some entry material, work their way up to sitting that entry challenge. That's all now done on an internal platform, so we can really monitor that pipeline. We have 1.3 million of goodwill in there, which is the goodwill from the Tech Returns acquisition, and then about 0.3 million of tangible assets, laptops, screens, stuff like that. Something else to note on the balance sheet is that the bank loans at the end of the period totaled 0.6 million, so we do expect to have these paid off by the end of next year. And yes, as I said before, they're paid off 22,000 capital to bring us to a net assets figure of just over 5 million.
So we started again the second half of this year really well, and we are trading slightly ahead of our management expectations in terms of that half of the year. We continue to look at increases in our brand awareness, and we're always looking to do different things to diversify our revenue streams. So we continue to invest this year in those new technology disciplines, with C# being the final course that we're going to introduce, and then not final course forever, but for next year we're going to let those 4 that we've got really bed in. And back to my discussion on the business model before, we are trying to keep things really nice and simple and not go off and do too many things, because we genuinely think that the market opportunity is vast. It's to concentrate on things that we know we do really well and that provide great value for all our stakeholders. And yeah, we're super confident in our ability to deliver on the expectations for this year, and certainly beyond that also. So yeah, thank you. And I have got some questions which I'll start with. I'm going to do the first one, then I'm going to hand over to Charles for the second, and then there's a couple more. Thank you, James. Do you anticipate further reduction in physical space with a view to shifting to a fully virtual model? With the move to a great virtual offering, how are you managing the quality outcomes for individual students? So we have our head offices in Manchester, so we do still, in the new one, we do still have some of that kind of WeWork style co-working space for those learners, and we do have the same in Leeds also, because we've got quite a few. We've operated in Leeds for many years, and we do have quite a lot of our core team members based in that area. And we are now, for example, we actually literally today had someone within the partnerships development for corporates start with us based here in London. We don't have an office, but they're happy to kind of do their own thing and work remotely. So that, of course, is an option. But I think it's really more important to talk about kind of community and events and feeling part of something, as opposed to having an office that you can go to do your coding course. We no longer have the hub in Newcastle or in Birmingham, and we've never had one in London. But however, we now have 1/3 of our students are based here in London, and what we're really doing to keep them engaged, as opposed to giving them an expensive office, is we can do a lot more with the cost of a central London. When you need to spend on a central London office, we can do a lot more to make those individuals engaged and drive fantastic outcomes for them because of that, than providing an office.
So we have a question from Rob. How much of your future revenue can you see at any point? So coming into this year, we actually had something like 95% of our revenue visible, maybe even higher than that, because we won a £10 million Department for Education bid. And obviously, in an ideal world, we will always win that type of funding just before the year end, so that we're going into the year with the revenue visibility kind of tied up. We know that our cohorts are oversubscribed, and therefore we can kind of map out that cohort revenue. The new Labour government, with the new Labour government and changes within the government, we are seeing a slightly slower approach to getting those bids out, but we're still confident that by the end of the year we'll have an idea and something in place. So hopefully we will be the same next year. That's very, very different for us. We used to operate a model of we would have 3 months worth of revenue visibility, because a student would sign up to the course, they would pay, and they would be on the course for 3 months. So that's changed quite a lot. It will change further with counter. So counter contracts are around 6 to 12 months long. And so we will have the revenue visibility and the contracted revenue from the counter contracts as well. So we've moved from a company that didn't have much revenue visibility at IPO to a company that pretty much should have the revenue visibility for the year tied up.
Yeah, I think I will just add to that one as well in terms of the Labour government. We actually have a ministerial visit to our next week on Friday, as it happens. But yeah, we're super confident in the investment in skills, and we think that what we're hearing about what they want to do with the apprenticeship levy and what they want to develop with Skills England. I mean, these training boot camps are providing significant value. Like NORTHCODERS is having, for example, someone who was a busker, now earning double the national average wage, working as a software engineer. And in terms of repayment on that very small sort of 10,000 investment from the government, they have years and years and years of that kind of income tax, never mind the actual business value being provided by that individual. And yeah, whilst we're hearing quite a lot about the budget, we're all hearing about our, capital gains tax, about, people getting told they're not going to get any help paying for their winter fuel anymore. Well, they've been told, not being told, sorry. However, we're not hearing any, we're going to make significant cuts to education, to skills, to the future of the super important workforce for growth. We're hearing the polar opposites again. It's a little bit uncertain at times, but from what we see, we're fairly confident in what's going on. Rob, question here: do you have what options do you have to accelerate growth? Are there any opportunities you see in the near term? So obviously definition of near term being one I'll take a guess on, but we are now operating a part-time training bootcamp model, which we intend to roll out across all of our disciplines. That's a very different model, and the way that we are doing it is we're giving lots of different flexible options to students, the way that they learn. You don't need to be have that at a certain time. You certainly don't need to give up your job to attend NORTHCODERS Monday to Friday 9 to 5. Now that's again yet another innovation with the coding bootcamp space that isn't being done by many of the bigger competitors, the bigger brands that sit alongside us. It might be being done in smaller places, but we think that could be a real growth driver, because that is being built in a way that is much more light to touch from NORTHCODERS, but it's still a top quality, high price per seat item. But yeah, we generally see that could be something that we could easily roll out, further afield than the UK, and we're just doing some kind of small cohorts of testing really at the moment, and the same goes for counter. So we have got counter contracts now. We literally launched this brand in May. We focus on getting it right, and we're really focusing on delivering quality and making sure that we build up a business model that is going to really be able to grow massively in the future. And you can't do these things really super fast, and we're also doing these things while making sure that we are bringing in profit for stakeholders. So that could be something that once we get to a bit of a critical mass of contracts and case studies, and we also have a better idea of predictability of our pipeline, about how long things take to land, length of contracts, so on and so forth, we could really build a business. That's a massive area that I genuinely believe we have a huge opportunity to disrupt. But yeah, it's about, I think the term is walking before you run. Oh, sorry, I missed the question here. Thank you for the detailed presentation. Great progress on train numbers. What was the percentage complete rate? So in terms of the courses, it's the completion rate as you add more students does go down. It's around about 90% of people from starting complete the course. In the education sector, that's pretty good. Of course, we do everything we can to always make sure that anyone who's committed to Northcoders gets all the way through. And how do you achieve nearshore pricing as an onshore supplier? Well, because the onshore consultancies have always charged far too much money, so then the nearshores have found a way of doing it cheaper but still making tons of profit, and we're doing it at a 50% margin where you get genuinely amazing people who are based in the town or the city that you want them to be, and it's a profitable model, and we're winning with that, and it's highly scalable too. So I think that's nobody asked that question before.
Yeah, I think the fact that we also don't have a bench of people,
Sure.
we don't have to pay people whilst they're not on contracts. We can literally win a contract, hire the people straight from our boot camp, and then consult them out. So we don't have any kind of lost cost within that model, and therefore we can just be cheaper than competition.
So I'll take this one here, Charlotte, and then we'll answer these questions and we'll let everyone get on with their evening. So good update. Thank you, David. Good update. There's an opportunity for geographic expansion with a shift to virtual delivery. I think that's probably, since the question being asked, come up in the answers that you can't see to the other couple of questions. In terms of the actual virtual kind of delivery of courses and basically the core product is much more efficient than having offices and building that community alongside it. And in terms of a part-time model, that is able to even be done without not without staffing completely. There's still mentorship and so on and so forth, but without actual physical delivery being required, even online.
I think something to just point out on that, we actually do run a full virtual course. All of the lectures are streamed out virtually, the seminar groups are virtual, and the kind of mental health is all virtual. The office space just provides people with a desk and a quiet environment to learn in. We've had a student in Hong Kong learn virtually on the same course as people in Manchester. We've had someone in Iceland. As long as the time zones kind of work, the main barrier to kind of growth on that side of things is making sure we have partnerships with businesses and we have the reputation in that geography to be able to enable that student to then go and get a job. And that is something that we will always looking to invest in marketing around in new areas to ensure that once we've got that reputation there, we can open up the course to students and then they can get that positive outcome at the end. Yeah, can do. This one's from Matthew. Could external growth or bolt-on acquisitions feature in your growth prospects, or are you happy with your organic initiatives? We did an acquisition in February last year, and we feel that that's really bedded in nicely now. We are seeing the efficiencies from the acquisition. We're seeing the new areas that has got us into, and the reputation of that brand has really helped us in other areas as well. For now, we are trying to really grow organically. We know where we want to be, we know how to get there, and that is organically. Never say never. If something comes up and it just really makes sense, it enables us to speed up our growth plans, then we would look at it. But right now, it's not acquisition kind of growth is not in our strategy.
Okay, amazing. Thank you for the questions. We've finished the questions now.
Fantastic. Look, thank you very much indeed for covering all those questions off. And of course, any further questions that do come through, the team will be able to review those and we'll publish responses where appropriate to do so on the Investor Meet Company platform. Just before redirecting investors to provide with their feedback, which I know is particularly important to you, Chris, could I just ask you for a few closing comments, please?
Yeah, of course. Yeah, great. And yeah, just thank you all for giving your time to joining us. And we're super happy with where we are now, certainly compared to where things got to last year, and we believe incredibly in our prospects for the future, and we'll look forward to engaging with everyone wherever possible. And yeah, thank you. That's all.
Fantastic. Thank you, Chris. Charlotte, thanks indeed for updating investors today. Can I please ask investors not to close the session? You should be automatically redirected to provide your feedback in order the team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure it's greatly valued by the company. On behalf of the management team of NorthCoders Group PLC, I'd like to thank you for attending today's presentation. That concludes today's session, and good afternoon to you all.
Thank you.
Thank you.